Welcome to Share Talk, the only podcast where investors come first.
Hi, this is Zak Mir with the Bulletin Board Heroes here on Share Talk for Thursday, the 25th of June. Starting off with African mining, and we've had a break or a gap through the resistance line from January around the 2.25 pence level. Above that, looking for a follow-on move towards top of the rising November trend channel that I've drawn as high as 4 pence. End of day close today and end of week close at the end of the week, or tomorrow rather, should be enough to inspire confidence that the 4 pence area could be hit with a stop loss back below 2.25 for the bulls involved in that particular situation. Chesterfield is next, and here the point of interest, I suppose, is just the way that we had a golden cross between the 50 and 200-day moving averages yesterday. If we get an end-of-day close back above the initial June peak at 6 pence, the upside here could be up towards the top of a rising trend channel from March at 9 pence plus. Stop loss at this stage back below the floor of the channel and the 20-day moving average at 4.3 pence. New stock for the Bulletin Board Heroes today is in the form of Driver Group. Here you can see that just breaking this line of resistance from December and have also already broken above the 200-day moving average and the initial June resistance of 55 pence. The view at this stage is that while we hold above 55, looking for a best case scenario target here at the top of the rising December trend channel at 100 pence over the next 2 to 3 months. Stop loss back below a combination of the 50-day moving average and the price channel floor from the turn of the year at 50 pence. Stock that probably wouldn't have made the grade normally on a busy day, but has made the grade now is IDE Group. Here we've seen the shares gap through the December resistance line around the 2.7 pence level. Nice sideways flag for the stock, which is normally a very good sign, and as little as an end-of-day close above the 200-day moving average at 3.4 pence should be enough to inspire confidence that the shares could hit the top of a rising trend channel from October towards 6.75 pence over the next 6 weeks to 2 months in terms of the time frame. Onto a stock which was mentioned in passing yesterday in a little discussion I had with some people. Iron Ridge Resources, a nice move here in terms of the gap through the 50-day moving average, normally a buy signal in itself. That completes an bear trap island reversal for the shares versus the brief May bear trap that there was. And the view at this stage is that while we're above the 50-day line, looking for a top of January broadening triangle here as high as 15 pence for the stock. If you're cautious on it, maybe wait for an end-of-day close above the 200-day line at 10.92 pence. On to Mida Tech Pharma, which has rather underperformed compared to some of its small cap pharma peers. Still waiting for an end-of-day close here back above 23 pence, which is that line of resistance from May. If we can get that, then perhaps the upper 20s, low 30s could be the target here. The big plus point here, really, the bullish divergence in the RSI window after the lower price low, but that wasn't matched by a lower RSI trace, so that is a leading signal in terms of the buy argument. But as I said, you can wait on an end-of-day close above 23 pence if you are not yet convinced of the merits of that situation. On to Pembridge Resources, which has been a reasonable prospect this week after the break of the trend line from March. Decent progress for the stock. Trend line was broken around the 3.2 pence level, and while we're above that, looking for a best case scenario target here as high as 7 pence. Gap to fill up towards 5.5 pence, maybe as an initial target at 7 pence, the area to shoot for. The other point, I suppose, is that we would like to see the shares remain above that neckline resistance, 3.8 pence, as they head higher. So that became the support today, which is quite handy, and we'd like to see that continue over the near term. A request is the next stock here, Premier Foods, which has had a great run over the last 2 or 3 months. This is a request for one of the leading Twitterati, let's put it that way, and leading investors, private investors on Twitter as well. So let's see how we go with this one. Top of the rising trend channel from the end of January is heading towards £1, and at this stage that target's valid, especially while we hold above the mid-50s. Ideally, the shares don't even go back below yesterday's intraday support towards the 60 pence level, but the floor of the channel there running through 53, 54 pence, and a while above that looking for up to £1. The big plus point, I suppose, going back was the way that the shares gapped through the 200-day moving average, as if it wasn't there in the middle of April, and never required even a retest. Plus the consolidations are sideways to up, which is also a very strong example of price action. Going on to just a couple more. Here we've got a stock that's been featured here recently, but now we're back near the highs, touchdown at expiration. Good dance of over the last week or two at and just below the 20-day moving average at 50 pence. While we remain above 50 pence, looking for a best case scenario target over the next month or 6 weeks to the top of a rising August trend channel at 80 pence. This stage only really back below the 45 pence level, really hurting the idea of further gains for this situation. Finishing off with a stock which I know a lot of people are following at the moment and probably scratching their heads in terms of where the share price is. But we've got Tiziana coming up with a decent key reversal move higher today through yesterday's high so far, and a very solid green candle opened at the low and has moved higher ever since, which is always encouraging. As long as we remain above the 97 pence level, which is the 20-day line on an end-of-day close basis, still looking for the top of a rising March trend channel at £1.40. This stage only back below the March trend channel at 90 pence really casts the ongoing break higher into doubt. Remember that the shares did actually serve a golden cross way back in early May, a buy signal between the 50 and 200-day moving averages. So I suppose in that way the upside here has been foretold successfully. That's it from me today. More updates tomorrow.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.